Jason Bond from the Bull Microcap Fund. Warren Buffett is arguably the greatest investor of all time. In fact, another great investor, Bill Ackman in New York, recently commented that he thinks Buffett is the greatest investor of all time because of the longevity of his track record. Buffett has averaged over 20% annual returns for over 70 years. Given that Warren Buffett is arguably the greatest investor of all time, it's interesting to ask what have been his best, highest returning investments. Have his best, highest returning investments been high quality companies with sustainable competitive advantages earning high returns on invested capital? Or have his best, highest returning investments been tiny microcap cigar butts or mediocre businesses trading well below liquidation value? The answer, as Buffett himself has said on many occasions, is that tiny microcap cigar butts have been most of Buffett's best, highest returning investments. For example, in 2014, Buffett wrote the following to the shareholders of Berkshire Hathaway. My cigar butt strategy worked very well while I was managing small sums. Indeed, the many dozens of free puffs I obtained in the 1950s made that decade by far the best of my life for both relative and absolute investment performance. Now, the term cigar butt was invented by Buffett. He said it's like finding a cigar butt on the street corner. It may be soggy and kind of repulsive, but you get one free puff, and that free puff is all profit. Buffett learned the microcap cigar butt investment strategy from his teacher and mentor Ben Graham, who was the father of value investing. And the idea is that there are some businesses that happen for the most part to be mediocre businesses, but that are trading far below liquidation value. There is something to keep in mind. Buffett was getting 50% per year returns on his microcap cigar butt investments, and he has said that on several occasions. But Buffett, in a couple of major cases, bought enough stock to control or influence company policy. There are two major cases to consider: Sanborn Maps and Dempster Mill. First, Sanborn Maps, which was a maker of very detailed maps used mostly by the insurance industry, was a microcap cigar butt that Buffett took a major position in. At one point, he bought 22% of the stock, and the stock was trading at $45 a share. The company had an investment portfolio of $65 a share. Buffett had to threaten a proxy fight, but he got the company to distribute the investment portfolio of $65 per share to shareholders. And so this ended up being a very profitable investment for Buffett's hedge fund. The second case where Buffett bought enough stock to control company policy was Dempster Mill. And Dempster Mill was, for Buffett, a local company in Beatrice, Nebraska. Dempster Mill was a maker of various farm equipment. Buffett bought 70% of the shares of stock. Then he tried to get the CEO to improve operations, but the CEO was either unable or unwilling to do so. And so Buffett brought in a turnaround specialist, Harry Bottle, who was recommended to Buffett by Buffett's business partner, Charlie Munger. And Bottle quickly reduced excess inventories, and Bottle improved returns on remaining assets by raising prices, in some cases as much as 500%. Meanwhile, Buffett took all the excess capital out of the business and reinvested it into high returning stocks. The bottom line is that Buffett's hedge fund bought a position in Dempster Mill at $28 a share, and it took a few years to establish this position. Then, a few years after finishing the acquisition, Buffett was able to sell at $80 a share, so the return over those few years for Buffett's hedge fund was 186%. Now, keep in mind that most of these microcap cigar butts are very tiny businesses with market caps of 30 million or less in today's dollars. The bottom line is that most of Buffett's best investments, which he was earning 50% per year returns on, were tiny microcap cigar butts. Now, if you're not able to buy enough stock in a tiny microcap cigar butt to influence company policy, you may not be able to get 50% per year returns. But you do have two options. First, you can follow another activist investor into the tiny microcap cigar butt. Buffett calls this coattail riding, and Buffett did this on many occasions. If you understand and respect the approach of the activists in question, you can follow them into the stock, and you may be able to get high returns that way. The other option, if you're managing 10 million or less, because in order to invest in the tiniest microcap cigar butts, you have to be managing roughly 10 million or less, is to take a passive approach to investing in microcap cigar butts, and you can probably get 30 to 40% per year returns if you take this approach. If you have any questions about value investing, especially as it applies to microcap stocks, or if you have any questions about my fund, I'm always happy to chat. You can reach me by phone or email. Also, check out my blog.